At some point, you've probably looked back through your parents' old photo albums, or maybe they've told you stories from when they were younger about how back when they were your age, they were already married, had bought their first home together, and even had a good chunk of savings in the bank. And that probably made you think, wait, how come I'm single, sharing an apartment with 3 other people, and have a net worth of negative $23,000? Thanks for that, student loans.
I declare bankruptcy!
You may have even been lucky enough to have experienced a conversation with someone of this older generation that goes a little something like this. Well, congrats on your new job, but now that you've done that and graduated, when are you gonna get a house? When are you gonna have kids? I want some grandbabies. Well, I don't think I'm quite there for babies yet, but as far as a house goes, I've been trying, but based on what I can save, it's gonna take another 6 years. Well, you've really just gotta work hard at the end of the day and make sure you hustle and grind. I mean, that's what me and your father did. Back when we were your age, we already had 2 kids, a house, and 3 jobs. But you guys had it way easier back then. It's so much more difficult to buy a home now. Well, that's just not true at all. We had it just as bad as you guys. Kids these days just don't want to work. No matter how hard you try to convince some of these people, they just really don't believe you. They think you're simply not working hard enough.
Get your up and work.
Or spending too much instead of saving. And because you hadn't seen this video up until now, you probably didn't have a solid argument because you didn't have the data to back up your claim that it was in fact easier to buy a home when your parents were younger. Well, make sure to save this video somewhere because today I'm going to be answering this question with the data. How much harder is it to buy a home today in 2022 versus around 30 years ago when many of our parents would have been buying their first home? We can also talk about some of the reasons why housing has become less affordable over the last few decades. So I initially started looking for news articles about how costly it is to buy a house now in 2022 versus how costly it was a few decades ago when our parents were buying their homes. But none of the articles I found were very good or up to date. So instead, I decided to go where no other finance YouTubers dare to go, and that is actually doing all of the research and calculations for the video myself instead of just basing the entire video off of some random news article. Sorry I had to sneak a little diss on the other finance YouTubers real quick. But seriously, I always do my best to make sure these videos are genuinely informative and hopefully also entertaining. So if you don't mind subscribing and liking the video, that would be amazing. So let's start by taking a look at how affordable buying a home is today for the average American. Then we can take a look at how affordable it was a few decades ago in the 90s, when most of our parents were likely buying their homes. Then we can compare both of the examples and see how significant the difference in housing affordability really is. To calculate how affordable buying a house is at any specific moment in time, I first had to find some key statistics about house prices, interest rates, and household income. Rest assured, I found most of the data from a very trustworthy source, my good friend Fred. And no, I'm not talking about that old YouTuber with the really high-pitched voice that we all watched when we were about 12 years old. I'm actually referring to the Federal Reserve Economic Database. It's basically data that's maintained by the research division of the Federal Reserve Bank, and it's the most accurate source of data when it comes to this kind of stuff. So let's dive right into the numbers and calculations. I found that right now, in 2022, the average house price is about $408,000. Assuming you put down the recommended 20%, you would need to save up a down payment of $81,600. The average annual household income in the US in 2022 is $87,864, which is equivalent to an average monthly income of $7,322. Now let's assume that you're trying to save up for a down payment on an average home, and because you're subscribed to Carson Gall on YouTube, you've started budgeting every month and living frugally, and you're able to save, let's say, 15% of your gross household income each month to put towards that down payment on your future home. 15% of your $7,322 monthly income is $1,098, which is your monthly savings. Stay with me here. So now, if we take the $81,600 down payment you'll need to buy your home and divide it by your $1,098 monthly savings, we get a total of 74 months, which is the number of months it would take to save up to buy an average home. That's right, if you make an average income, it would take you a little over 6 years of saving 15% of your pre-tax income to buy an average home right now in the United States. And I know you don't need to put as much as 20% down on your home. You can put down as little as 3% in some cases. I even put down 10% on my home. But for the sake of this example, I just went with the recommended 20% down payment. Another calculation that's important when it comes to housing affordability is the percentage of your total income that is spent on housing. Right now, the 30-year fixed mortgage interest rate is about 4.7%, which means that that the monthly mortgage payment on an average $408,000 house with a 20% down payment is about $1,955. This means that if you make an average income today and buy an averagely priced home, you would be devoting 26.7% of your gross income to just the mortgage payment. And this payment is just for the mortgage portion of your housing payment, so it doesn't include property taxes, homeowners insurance, utility costs, or anything else that makes up a monthly housing payment. Also note that the income number I used is gross income, not post-tax income. But let's exclude things like taxes and insurance in this calculation so we can keep things apples to apples when we compare how affordable housing was in the 90s. So now let's move on and take a look at how much easier it would have been to buy a house for our parents 30 years ago in the early 90s. Back then, the average house cost was $120,000, which seems unreal. Assuming a 20% down payment again, they would have needed to save up $24,000 to put down on their house. The average annual household income at the time was $55,559, which is equivalent to $4,630 a month. Assuming they were able to save the same 15% of their pre-tax income, they would be saving $695 a month. This means it would have taken them 35 months, or just less than 3 years, to save up the 20% down payment to be able to purchase their home. But let's take a look at how much of a percentage the mortgage payment would have been of our parents' gross income. 30 years ago, mortgage interest rates were about 9%, which means that the monthly mortgage payment on an average $120,000 house with a 20% down payment would have been about $851. That means that our parents would have spent around 18.3% of their gross income on their mortgage. So now let's compare both examples so that we can make sense of all this data. Right now in 2022, it would take an average of 74 months to save up to buy a home, whereas it would have only taken 35 months on average to save up for a home 30 years ago. That's over twice as long today as it was 30 years ago. Also, 26.7% of an average American's pre-tax income today would be spent on their mortgage payment versus 18.3% 30 years ago. That means that if the average American buys a house today, it would cost around 46% more on a month-to-month basis than it would have cost our parents' generation 30 years ago. So I think we can definitely conclude that buying a house today is a lot harder than it was for our parents. But I did want to share a few things that I found really interesting, as well as some other things that I considered when doing this analysis. First, I thought it was crazy that even though mortgage rates in the early 90s were practically twice as high as they are now, 9% compared to 4.7% today, housing is still significantly less affordable today than it used to be. This is because house prices are just that much more expensive now. I mean, the average house costs over 3 times what it did 30 years ago. House prices have risen an incredible amount over the last 30 years, far surpassing the increase in wages during the same period of time. In fact, I worked out that house prices have increased an average of 4.1% annually over the last 30 years, compared to a measly 1.5% annual increase for household income. Some of the biggest reasons for this have been due to lack of housing supply and lower interest rates, which caused the demand for housing to far outweigh the supply, which subsequently drove up the home prices. Another thing I had to consider when doing this analysis was how much I should assume a person could realistically save from their income to put towards buying a house. I decided to assume a savings of 15% of pre-tax income and use this assumption for both of the examples of buying a house. But it occurred to me that it's probably much harder to save 15% of your income today than it was 30 years ago. For example, millennials are burdened with a much higher amount of student loans compared to previous generations. They also pay higher rents when adjusted for inflation. So it really isn't as easy to save 15% of your income today as it was back then. If we assume saving 15% back then is about as easy as, let's say, saving 10% of our income now, then it would actually take 111 months, or a little over 9 years, to save up a down payment on a home, which is 3 times as long as it would have taken 30 years ago. Finally, I had to accept that there were going to be some caveats in this analysis. It's impossible to really do a perfect analysis here. I had to rely on averages to make it as accurate as possible, and that comes with some problems. For example, one reason inflation-adjusted house prices are higher today than they were 30 years ago is because the average house today is also larger than the average house 30 years ago. People just tend to build larger houses these days, which costs more money. The most accurate way of doing this analysis would have been to compare the same size home 30 years ago to the same size home today, which I could have done using the average price per square foot housing data instead of the average house price data I used, but I'm pretty sure I would have just lost about 80% of my viewership because a lot of people might not have made sense of what I was doing. And then the YouTube algorithm wouldn't have recommended this video to you, and it just would have been a mess. So I just decided to keep things more simple. But feel free to let me know in the comments if you felt like I did something wrong in my analysis, or if I forgot to include something, or if you just have a better way of doing all of this. Also, I was thinking of making another comparison comparison video, but this time instead of buying a house, I would be comparing the cost of a college education today versus when our parents went to college, because I know that's also a very controversial topic, and I'd love to see the real data behind it all. So let me know in the comments below if you'd like to see that as well. But thank you so much for watching, and I'll see you in the next one. Take care.